Hey everyone, welcome back to Corporate Decoder. Today, TISI just filed its annual report for the 2025 fiscal year, and I'm seeing some interesting numbers in their employee benefit plan that tell a story. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company seems to be steadily growing its assets and managing its employee retirement plan, but there is a detail about past issues with contributions that caught my eye. This filing is an annual report for Team Incorporated's salary deferral plan and trust. Think of it as a peek under the hood of the company's retirement savings program for its employees. It shows how much money is in the plan, where it is invested, and how it performed over the last year. Let's jump right into the numbers. At the end of 2025, the total assets in the plan were over $399 million. That is a solid increase from about $357 million at the end of 2024. This growth is a good sign, showing the plan is accumulating value. Now, where is all that money going? The biggest chunk, over $390 million, is in investments. This is where the growth is happening. The plan invests in various options to grow employee savings, and it looks like those investments did quite well in 2025. Digging deeper into how the plan grew, we see significant additions. Total investment income for 2025 was almost $60 million. That includes interest, dividends, and the change in the value of the investments themselves. On top of that, employees and the company contributed a combined $35.8 million. This shows active participation and company support for the retirement plan. It is great to see that participants contributed a significant $25.7 million. This indicates employees are actively saving for their retirement. The company also put in its share, contributing $7.4 million, and there were also $2.6 million in participant rollover contributions, meaning people moving from other jobs brought their retirement savings into this plan. Of course, money also leaves the plan. The plan paid out over $53 million in distributions and benefits to participants, which is expected as people retire or access their funds. Administrative fees were a bit over $600,000, which is pretty standard for a plan this size. Now, here is where things get a bit more interesting and where the company has had some past hiccups. This section, the schedule of delinquent participant contributions, reveals that back in 2019, 2021, and 2023, there were unintentional delays in the company submitting participant contributions and loan repayments totaling over $7.2 million. This is definitely something to note. While they say these were unintentional, it means employees' money was not getting into the plan on time. The filing states that as of December 2025, they had processed corrections for about $1.9 million of those late contributions. However, the contributions not corrected section shows a significant amount over $5.2 million that had not been fully corrected at the time of this filing. They are in the process of calculating lost earnings for the remaining $13,712. It is good, they are working on it, but a delay in correcting such a large amount of money can impact employee trust and their retirement savings. Let's look at the investments again. The schedule of assets shows a wide variety of investments the plan holds. We see a significant amount in mutual funds, totaling over $372 million. A large portion of that is in well-known funds like the Fidelity 500 Index Fund, with a value of over $46 million. Interestingly, the plan also holds Team Incorporated's common stock, valued at nearly $6.9 million. This means employees' retirement money is directly tied to the company's performance. The plan also includes participant loans, which are essentially employees borrowing from their own retirement accounts. These loans add up to almost $9 million. The interest rates on these loans range from 4.25% to 9.50%. So, what is the story here? Team Incorporated is growing its employee retirement plan, with assets climbing significantly in 2025 due to good investment performance and strong contributions. The company is actively investing in a diversified portfolio, including its own stock. However, the continued mention of delinquent participant contributions, even if unintentional, points to past operational issues that have not been fully resolved. While the overall financial health of the plan seems robust, this lingering issue of delayed contributions is a concern for employee confidence. Given the recent news about leadership changes, including a new CFO and the retirement of the Chief Legal Officer, it will be important to see if these operational improvements continue to be a focus. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.